Hello, welcome to the Joe DeLisi Financial Advisor podcast. I'm Joe DeLisi. Today we're going to talk about how much you want to bet. How much do you want to bet on your financial future? Meaning gamble. How much do you want to gamble, really? This came to me recently. I get this a lot too. We're going to talk about individual stocks and speculating really on individual stock movement. Now, any number I'm getting today, we're just going to talk about Tesla. And I need to be very upfront. I'm not saying you should buy Tesla. I'm not saying you shouldn't buy Tesla. I'm making no judgment call on any individual position today. I'm just using them as an example because of what happened recently. So, as probably most of you are aware, there was quite the kerfuffle between um, arguably the richest man in the world, Elon Musk, and arguably the most powerful man in the world, the President of the United States. They had a very public breakup, shall we say, back on June 4th or 5th. And, this kind of took place over Twitter. And what happened was Tesla stock dropped about 14% that day. Just looking again on Yahoo Finance at the quotes of Tesla on June 4th, Tesla opened at 345 and it closed at 332. On June the 5th, it opened at 322 and it closed at 284. So there was essentially, at one point, it was down to about 273 per share. So it was about a 14% loss. What happens in any circumstance like this, now it's rare that would happen in one day. It does happen when companies will come out with their earnings or some kind of big announcement, and there's a big movement either on the upside or downside of the stock. In this case, it was sort of like one of those situations where people look at it and they go, well, obviously, it dropped 14% because of this public argument and the company's not worth 14% less. And again, I'm not saying that. I'm just telling you what I hear from clients and prospective clients and just people, friends. So everyone knows what I do for a living, so I'll get this a lot. What do you think about the market? What do you think about this stock? What do you think about that stock? Which is always tough because I have to kind of take a pause and not get on my soapbox and start talking to them about, well, there are 17 different markets and asset categories and all the stuff that we talk about on this podcast. They're just trying to make polite conversation. But in this circumstance, when Tesla dropped roughly 14% in about a day, I did get a couple of people. They tend to be newer clients, like within that last, say, year or 18 months, maybe 2 years at the far end, where they'll say, look, we should buy Tesla stock, shouldn't we? A 14% drop, this is an obvious buying chance or buying opportunity. And my answer back to them is, well, how much are you willing to gamble and speculate? And is it actually going to make a difference? So just think it through for a second. Like if you have $10,000 and you're going to throw it at this stock with the idea that we're going to pick up a free 14% increase on that because it dropped 14% for really no reason, and it's going to come up 14% and boom, I made 14% on my money. Okay, great. Let's just say that happened. Let's say it happened in a day. So you put 10 grand in there, you made what, 1,400 bucks? But you didn't. You made it on paper. It didn't matter until you sell it. And so if you sold it in under a year, now you're paying ordinary income tax on that. For a lot of my clients, that means they're at a 37% bracket, not including state. Let's just call it 40%. So they lose almost half of their speculation, their speculative play there on taxes, um, on a stock that may not come back 14%. And again, is it worth it? Is it worth it to throw the 10 grand at it? Literally, that's a gamble. It's actually like a blackjack hand. So my question is, well, how much do you want to bet? Are you going to put $1 million in it? And even if you put $1 million in that stock, think about that for a second. Like, how much money would you actually need to have on your balance sheet in a liquid position, so that you wouldn't feel the effects of that $1 million if it actually dropped another 50%? Because that could happen. Nobody knows the future. That's the whole point. That's why it's speculation. But even if you were to put that $1 million in there, the same math holds. Let's say it did come back 14%, and let's say it happened in a day or two. You made 140 grand. Now you might be thinking, well, that's 140 grand. Got it. But that's before tax, and you have to sell. So when do you time the sell? It's the same old argument of, well, you got to be right twice. You got to time it on the downside, which seemed obvious to people because, oh my gosh, 14% one day over an argument, let's buy. But then you got to know when to sell. And here's the thing, Tesla didn't come back in a day. So just again, looking at Yahoo Finance, anybody can pull this up. At the low point on June 5th, right off of the chart here, it was trading at a low of $273. On June 6th, it closed at 295. So if you had thrown 100 grand in there, let's say, hoping to pick up what, $14,000? You didn't pick up the $14,000 because it went from a close on June 4th of 332, and then after the public debacle, it closed at 295 on June 6th. It only closed at 308 on June 9th, and on June 11th, it was 326. So you're not even back. You're not even back to where you were. Now, at the recording of this podcast, it's trading at about 331, so it's about where it closed, right? So you're looking at it going, okay, so if I would have bought in on June 5th, by June 16th, so basically 10, 11 days later, there's my 14%. Joe, this was so obvious. Got it. But what if it didn't do that? And how long are you willing to wait? Right? So what if it didn't climb back? What if it climbed back a few percent? How long are you going to hold to that stock? And now you're literally in a speculative play on one company that I would argue you don't really know that much about outside of the stories that you see in the media. Right? And again, this has nothing to do with Tesla. This can be any company. Any company. I can ask you, well, who is the CEO of that company? Well, now Tesla, we know. Most everybody knows. But if it's any other company, if it's even if it's Apple, and I ask you who's the CEO of Apple, most people can tell me. But if I say, well, who's the chief information officer? Who's the chief operating officer? Where do they manufacture their glass for their iPhones? Who are their top competitors? What's next on their to-do list? How are they going to, move money? They're looking at India in the case of Apple. So there's all these things. What was their net cash flow? How many employees do they have? How many employees are here in America versus overseas? These are things that you actually need to know if you're going to buy one individual stock. So how much are you willing to speculate? How much do you want to bet on one company? And in this case, if we're talking about Tesla, we've got a situation where it dropped presumably over an argument, a spat. That those two men it looks like they've patched it up, but had they not, that stock could have remained low or gone lower. To me, it's just not worth the upside. Why are we investing? What's the point? It's not to speculate. It's not to gamble. If you want to do that, and I'm not saying this tongue in cheek, I really mean, if you want to gamble, go to Vegas and gamble. There's nothing wrong with that. You can have a great time out there. Go to the blackjack table. Do it. That's what gambling is. You're out there to gamble and have a good time. Hey, maybe you win some money, maybe you lose some money, but you're not going to lose everything. But to take money off of your balance sheet, significant assets, 100,000, 500,000, 700, $1 million, to gamble on a 14%, in this case, dip, that it's going to come back. And then what, you're going to sell it short term, realize ordinary income, you're only going to get half of that benefit anyway. When you really sit and think about it, it doesn't make any sense. It really doesn't, because the point of the money, the point of your investment portfolio is to fully fund your financial plan, which holds all of your family's hopes, dreams, and desires. It's not to beat anybody. It's not to look super fancy and smart. It's not to beat your brother-in-law. It's not to give out hot stock tips because you made a bunch of money on a single stock. That's not the point of the money. That's speculation and gambling. We're not going to do it here. I do understand where it comes from. I understand that 14% drop looked pretty juicy, pretty exciting to people. I get it. I'm not saying you're silly for thinking about it, but my job is to stand between the between a potentially disastrous decision, and also you could say to me, well, Joe, I can afford to lose $10,000. That's just not a big deal. I just want to throw 10 grand. Okay, great. But to what end? What is you pick up 14 grand or you pick up $1,400 on a $10,000. What's the point? It doesn't further your balance sheet in any meaningful fashion. So whether it's this company in particular, Tesla, or any other company, or any other category, or any other sector, or even international versus domestic, we're not doing that. We're not speculating. We are building portfolios off of science, not feelings and gut and speculation. This material is intended for general public use and for educational purposes only. By providing this content, Park Avenue Securities LLC and your financial representative are not undertaking to provide investment advice or make a recommendation for a specific individual or situation or otherwise act in a fiduciary capacity. Joe DeLisi is a registered representative and financial advisor of Park Avenue Securities LLC, Pass OSJ 5280, Carroll Canyon Road, Suite 300, San Diego, California 92121, 619-684-6400. Securities, products, and advisory services offered through Pass, member FINRA, SIPC, financial representative of the Guardian Life Insurance Company of America, Guardian, New York, New York. Pass is a wholly owned subsidiary of Guardian. Westpac Wealth Partners LLC is not an affiliate or subsidiary of Guardian or Pass. Insurance products offered through Westpac Wealth Partners and Insurance Services LLC, a DBA of Westpac Wealth Partners LLC, California Insurance License 0D34103 808